the Bombay Chartered Accountants Society, Pranay Bhai, seniors, Himanshu Bhai, past presidents of the society, distinguished guests, seniors, and people online. A very warm good evening to all of you on behalf of the Bombay Chartered Accountants Society. And it's my pleasure to have all of you here today on a topic which is very, very important towards the fag end of the financial year. And that has been something which has come as a bolt out of the blue, which is the banning of unregulated deposit scheme ordinance 2019. This is one important step of the government in trying to regulate the deposit schemes, which was already regulated to a large extent, but also trying to make sure that there is no situation of unregulated deposits. And therefore, ordinance has been introduced in the month of February. We are still to see many procedural aspects being clarified, and the details are being awaited. And that's where there are lots of questions which are there because the ordinance has already become effective. And we thought that on this burning topic, it's important for us as professionals to understand these entire nitty-gritties of this issue, so that we can guide our clients in a better way, and also to ensure a proper implementation of this entire thing, which will also have some impact on their audit processes as well. So we decided to have this lecture meeting, and we are thankful to CA Sandeep Shah, who readily accepted our invitation for addressing us on this very interesting and an important and relevant topic as of today. CA Sandeep Shah is a dear friend of BCS as a part of the core group and a part of the corporate and allied laws committee. He is a chartered accountant and a senior partner from NA Shah Associates. He leads the firm's audit and assurance practice, has over 35 years of experience encompassing the provisions of assurance and corporate services to a diverse range of industries. He has been actively engaged with the Institute of Chartered Accountants of India in several honorary positions as a member of the Ind AS Implementation Committee, Ind AS Technical Facilitation Group, and the Expert Advisory Committee, and the Shield Panel formed by the Research Committee for awarding the ICI Awards for Excellence in Financial Reporting. He has been a special invitee of the Accounting Standards Board and is on the panel of the technical review formed by the FRRB. As I was highlighting, he has been a member of two committees of the Bombay Chartered Accountants Society, which is the Accounting and Auditing and the Corporate and Allied Laws Committee. Has been on the executive boards of not-for-profit organizations like the National Burns Center and the Rotary and Somaya Education Trust, etc. He is a voracious reader, and his hobbies include gardening. Of course, he is a very prolific speaker, and we've just seen him in action in a panel discussion on the recently in a corporate conclave, which was very well conducted by him. Sandeep Bhai, welcome once again to this forum, and it's our pleasure to have you with us. Before I invite you to speak, may I request Chetan Bhai to present a memento as a mark of our love and affection? Sandeep Bhai, please.
Is it visible? Good evening. Thank you, President Sir. Thank you, Jitin Bhai. And good evening, dear professional friends, my colleagues and seniors in profession. I would have loved to have a lawyer friend along with me because at the end of the day, we are dealing with a topic which is more than 50% of the elements are going to be in terms of the legal representation, the kind of analysis and the fight again in the court of law, whether are you on this side of the table or are you on that side of the table. Any lawyer uh, professionals here? So I would love to have somebody to take through some of the provisions as we talk because that's what is going to happen. The this presentation is essentially broken up into three parts. One is to look at what the regulations are, and at the later part of the presentation is to try and look at what is the kind of responsibility which we as professionals, either as statutory auditors or as advisors, or sometimes even as directors or professionals associated with the various legal entities, and what implications does the law have. I'm not going to deal with some of the extensive procedural part because then that would take you maybe 2-3 hours. As President Sir rightly mentioned, that they obviously announced the law. Each state government is supposed to have its own regulators. There is supposed to be a registration portal, and they are supposed to also give you the quantum up to which you can accept deposits for the purposes of governance within this rule. And none of these three things are there. And this reminds me of a hospital scenario that you had a patient who had fever, and obviously then somebody would come back and say, okay, malaria ho sakta hai. Somebody says, oh, dengue bhi ho sakta hai. Somebody came back and said, oh, typhoid bhi ho sakta hai. Now we don't know between these three what is right. So they said, all right, give all three medicines. And the point is that most of them will be contradictory. So the backdrop of, it's a very interesting provision built around this section. I'm not going to take you through the abbreviations, maybe for the brevity's sake. For those who are going to view this presentation, these are some of the items which will remain. So the broad coverage is between the genesis, salient features, key definitions, applicability, exemptions, challenges, and confusions, administration penalties, and auditor's role. I think that's how I've structured this. There are about 40 slides. I have an hour to cover up. Maybe I'll have at least 7-8 minutes for some question answers, and to my best of my ability and understanding, I will try and give answers, and I'm not sure whether I will be able to fulfill all your expectations, but let's see as it comes by. Obviously, the scams under the schemes, the Rose Valley, the Shraddha is obviously the last of the straw, where we all have seen what has happened in Calcutta around this. Speak Asia was one of a classic example of a Singapore-based entity who started without registration, taking money into the bank account, and they did not know where to knock the doors on because it was not a regulated entity in the country at all. And then there are obviously the pen card clubs, for those who would have seen the under the collective investment scheme of SEBI, 7,000 crore plus kind of money raised. I'm like, so when you have a large population, when you have a greedy population, when you have a tough economic environment where your interest rates are coming down, where your lifespan is increasing, where you have an early retirement age, there is bound to be a scenario where people will find avenues at 5, 6%, 7% of bank interest is no longer going to be sufficient. Your mutual funds, your stock markets is always going to be a question mark. You had those IDBI 15%, 30 years bond, 5th year, everybody subscribed, they did a call option and redeemed everything. And so therefore, there is a challenge in this country where your inflation is close to double digit, while the government may proclaim that we are still in 3, 4, 5%. But when we look at this, we are a service consuming industry. When you have inflation close to 10% and all other cost of services rising, this is a real challenge for the country, and therefore we as professionals are going to be got caught into this dilemma between those depositors who are today not very well educated of what they would like to do, and then there are obviously takers. I mean, like, if there are givers, why not takers? And that's where I think we are frozen between the two part. So obviously the type of schemes are what you call typically the Ponzis or the pyramid, where in the Ponzis you lure the investors, pay profits for a real investor with funds. The most capital is your price sheets, and in pyramid is who's the one who's finally caught with the pillow, because you are collecting, giving 40%, he goes and collects the second one. It's a circular round trip. And for those who read today's paper, I mean, like, even if actors like Akshay Kumar, who with his Dhoni, if he can put his 75 crores into or a return of 75 crores in a joint venture in a real estate industry, and the joint venture does not kick off, and for the kind of money and the kind of advisors which he would have. If he's caught into the game, then what is the relief for people down the line? So that's the backdrop with which we are talking. Obviously, accepting money from public involves huge responsibility, and therefore you have seen that ever since the Companies Act had stringent penalties for default under the public deposits. A lot of independent directors were averse to join those boards where public deposits were being accepted because the consequences of non-payment were substantially higher. But nonetheless, there are obviously good companies which are, it's a well regulated rules, if I may say so, with the liquidity ratios, the return of filing. Uh, but nonetheless, it's a huge public responsibility. Obviously, RBI regulates the NBFC, SEBI regulates the mutual funds, your stockbrokers, your state and union territory government regulates the chit funds, MC oversees the deposit taking companies other than NBFCs, NHB regulates the non-finance companies. So you have hordes of regulators who are trying to regulate each of the industry. And despite so much of regulators, so much of thought processes, so much of plethora of experiences, you still have the dubious individuals who have got defrauded, predominantly from the poor and illiterate through illicit deposit taking scheme. I mean, like, I have a servant, my mother-in-law servant, in fact. That guy deposits every month 50% of his collections into a chit fund, and he expects me to give him a housing loan, and he still believes that his saving is safe. Now, a servant which is in South Mumbai who works for a professional family, and when you talk to him that I will not give you, you deposit that money in the bank against the loan, he doesn't want to listen, because when they spend the 2 hours in the evening along with the people in the group, the social pressure on them is so strong that all intelligence goes for a toss. And I'm sure if you talk to your drivers, you talk to your servants, you talk to your maids, you will find a similar story. So we as professionals are also not able to influence people over whom we have influence. So forget for those which are not in your circle of influence. Broadly, before I touch upon it may be a little difficult for the people in the last row, but I will just try and share two of the other laws and that's from where this hospital concept came in. So, Reserve Bank of India, 1934, Section 45I defines what is the business of a non-banking financial institution, which means a financial institution, including a non-banking financial institution. That's how the NBFCs, what is the business defined as? And what does a financial institution mean? It means a non-banking institution, and non-banking institution means a company, corporation, and cooperative society. So, RBI Act was very clear. Unless you are a company, corporation, and cooperative society, you could not have been in the deposit taking scheme at all. But because it was a central law and because the frauds were happening at the state level, so therefore they were finding that the teeth available to the regulator was that much poor. So it was saying business of non-banking institution carrying on as its business. And mind, and this is important because this choice of word as its business will find place when we come to the birds, as we call, banning of unregulated deposit scheme. For the ease of talking, we will call this birds. And birds have yet to open up or bloom. So when it blooms, we don't know. So it says part of its business, financing, acquisition of shares, letting or delivering of goods on hire, insurance business, managing, conducting cheats, queries, and collecting for any purpose or under any scheme or arrangement. These are deposits, and then you have the exclusions. And what is a non-banking financial company? A financial institution which is a company, an NBI which is a company and has its principal business the receiving of deposits under any scheme or arrangement or lending or such other NBI as specified. So basically it said that if you are in the business of deposit taking, then the RBI Act covers as a part of your regular source of business. Everybody other than company had to actually not be in the business of deposit taking at all. So if they made this act itself fully operational, I don't think we required birds. But be that as the case may be, they found this act not to be still powerful enough. So then they came back, and sometime in 1999, all of them got together and said that every state government therefore must follow what they call a Protection of Interest of Depositors in Financial Establishments Act 1999. This is more or less an act which has both the civil and a criminal and a financial liability disgorgement. Everything is there in this law, and every state has a respective uh, act where the your deputy collector is supposed to be the regulator under this, with police having all the powers under CPC. What does it define deposit as? And this is an inclusive definition. It says includes and shall be deemed always to have included any receipt of money or acceptance of any valuable commodity by any financial establishment to be returned after a specified period or otherwise, either in cash or in kind, or in form of a specified service, with or without any benefit in form of interest, bonus, profit, or in any other form, but does not include then 1, 2, 3, 4 those exemptions of capital and borrowing from the relatives and whatever those, some of those exclusions were there. So this did not necessarily mean that your deposit had to be, your primary business should have been of accepting deposits. So this was the additional rule given in the hands of the act, and rules given in the hands of the state governments to be able to enforce at local level. And what did they define financial establishment as? Means any person accepting deposit under any scheme or arrangement or in any other manner, but does not include a corporation or cooperative society owned or controlled by so and so. Now, which would have meant that if this was correctly regulated, I don't think you really required birds. But still you had a challenge. And the challenge was on account of the fact that all those who are readers of the case laws, I mean, like the matter on, let's say, one of the Maharashtra matters which went ahead to the Bombay High Court was in a case of a SEBI registered category 2, where they were drawing money under a portfolio management scheme. And the portfolio management scheme, the document did not say that this has a fixed rate of interest, but their covering letter, their whatever were the rest of the document said that this is what is a PMS which will give you this kind of return, because that money effectively was collected and deployed in the stock markets, and the return was a fixed kind of a return to be handed over to the deposit taker. Now the question here, when the matter went to the Bombay High Court, obviously that this was one case where the person probably defrauded round about some 112 crores of deposits from different people. And when it went to the right up to the Bombay High Court, they said that, look, if SEBI is my registered regulator, how does a PRS come into point? So it took them 7 years to come to a conclusion that PRS still applies. Now, in the bargain, nothing has happened. So the government therefore felt that RBI Act is not good enough, PRS is not good enough, and so therefore we must now find out that, okay, what more is good enough for us? And so all these questions came around. The genesis therefore came around from a point that we must therefore, rather than chase the tail, we must cut off the tail. So we must say that you can't even start. I mean, that is the point. And now let's see whether it's only time will say, and the intelligent intellect lawyers who are obviously going to argue this application of this ordinance to a great extent. So we'll see what happens there. So therefore, with this, the standing committee which was there, they obviously had all the regulators. They found out that there were over 1,000 cases. They analyzed the various cases under various laws with various state government and made up a list of all the kind of frauds which had happened. And this reminds me of Justice Hidayatullah, when the matter against the peerless, first time, I think back in 1977 or 78, when the matter on the chit funds came in, the regulation was drafted, and the question was that whether the whole regulation was drafted with peerless in mind. And when the matter reached Supreme Court, Justice Hidayatullah finally came back and said that in your zeal of making a document of 40 pages to bind this elephant, you are still not able to bind that elephant because you still have a faulty in your drafting. And he finally, in his judgment, gave out 5 lines, President Sir, to say that if this is what you had drafted, I would have hanged peerless. Now, what it means is that in my professional career, what I have seen is the quality of draftsmen has certainly deteriorated. I mean, like the kind of draftsmen which were available, which knew very clearly what does a full stop and a comma mean, when and where, what does term mean. We are finding that in the pressure of the government and the regulators not to be seen in the newspaper for wrong reason, the draftsman has started compromising on their quality of drafting skill, and therefore we are seeing that there is so much of slippages between the fingers. Nonetheless, that is how finally they introduced in July 18. Lot of deliberations happened. I don't think they listened to any of the comments given to them. They finally decided what they had made up their mind. It was only a procedure to be followed. So they said, okay, this is the draft issued. Your committee is met. Your standing committee was invited. They spoke to various people. They gave their answers, and finally, in February 19, 21st February, your president promulgated the ordinance, and that's where now it has become effective. So what does the ordinance? So it was expected originally, if you look at the standing parliament committees, the brief note, this was expected to override the existing state laws, the PRS, what we saw, because they wanted that whatever actions have been taken under the PRS for the up to the date on which this ordinance came into effect, they wanted the state subjects to continue, because this ordinance will come into effect from the day for all activities happening post that. You may have a scheme which may be unregulated, but the moment under that scheme, if you accept anything which is outside the exemption, then this ordinance will hit. So they did not want the, but finally, when you look at the clause 35, they've come back and said that this existing PRS will continue to survive. So what is going to therefore happen is that you will have different courts looking at different things. For a same crime, you will have a crime which has happened under PRS, and you will have a crime which has happened under these buds. You will have two different regulators with two different ordinances trying to nail one individual. And if they don't get their law right, then that individual is going to escape free, because they will come back and say, you can't, you make up your mind whether are you hanging me under PRS or are you hanging me under buds. I mean, that's the first fault of the, and what I'm finding it surprising is that their own, on the third page of their standing parliament committee, it says it will survive. When you come down to the 12th or 13th page, it will say that this will not survive. They themselves could not make up their mind what they wanted to do, whether they wanted the earlier PRS to survive or they did not want to survive. I mean, like, I get very agitated when I see a same piece of document and inconsistency. I mean, like, they didn't have to go anywhere else. Anyway, so it covers the 3 types of offenses, provides for severe punishments and heavy pecuniary fines, enables creation of online central database, which I said that which they've yet to create, because they essentially would want to know on an all India basis. It's like the CIBIL or your registry, for collection and sharing of information on deposit taking activities in the country, and adequate provision for disgorgement or repayment of deposits have been provided in cases where such UDS managed to raise deposits illegally. So there are questions going to be under an IBC, whether they will take the depositors who are under birds, whether they will take precedence over the others or not. So these are some of the provisions which they've tried to cover up. But even at this point of time, we know that 45,000 crores of the one which resolution which came in SR, yeah, they have still not distributed, because they are still not able to decide. Even at the IBC level, they are not able to decide whether how much will go to the operational creditors and how much will go to the financial creditors. Now you can imagine they've resolved a company, they've collected the money from the new promoter which has come in, but they can't still come to a conclusion how to deliberate. So you're going to have another set of challenge when this kind of IBC claims are going to happen. It provides for the attachment of properties and assets. Now, this was another major source of litigation which was happening, that attachment of properties. Now, if I have acquired a property prior to, I have faulted birds. So, therefore, it's not a proceeds of crime. I've not invested those deposits, but those are my, let's say, my inherited property. And this was a whole range of disputes were happening under PRS, that whether can they attach assets before you started defaulting under the relevant regulations. I mean, and I'm sure this is going to continue even under this law, that whether what assets you had prior to you started defaulting under a regulation, whether will it get covered or not. It also provides for investigation, search, seizures connected with the offence, with or without warrant. Clear-cut timelines have been provided for attachment of property and restitution to depositors. And considering the nature of the law, it is applicable in the immediate effect with no transition provisions or relief. I mean, that's rightfully so. So, on a key definition, so what does the deposit mean? It means amount of money received by way of advance or loan or in any other form by any deposit taker with a promise to return, whether after a specified period or otherwise, either in cash or in kind or in form of services, with or without any benefit in the form of interest bonus. This was more or less picked up from the PRS. And in case RBI Act respectively, because there are regulated industries for which they have said that whatever the deposits are there, you will follow that definition. So what are they saying are not considered as deposit? So they are saying which are not returnable, capital contributed by partners. Now, unfortunately, sometimes I'll come to the loans received by individuals from relatives. Now, relatives is defined under the Companies Act. Now, in Companies Act, they have removed away some of the direct connections from the in-law side. Now, that is going to be another set of challenge. That way we live, you want to cover HUF, but when it comes to an extended family, you want to exclude some of the relatives from the definition. If somebody as a regulator wants to play strictly by the rule, what does not fall under relative under the Companies Act will be outside, and therefore they can technically apply buds. And that is what is going to. So if somebody has to actually strand the rubber band, this is what can happen, and this can. And why am I mentioning this is that particularly we have seen that when the families gets into a estranged relationship, and when your intelligence is substituted with the intelligence of the lawyers, and if you want to pull somebody else within your relation, all that they are going to do is that they are first going to identify whether if there is any financial transaction, and if you're going to find that you are outside this framework, the lawyer is going to, because relations have already got estranged, there's nothing more to lose, apply this section. So from a practical dimension, one piece of advice, particularly when we are looking at, see, in the best of the time, nothing goes wrong. The challenges in our Indian family constitutions happens is that it's over some small silly matters, over a wedding mein bulaya nahi bulaya, uske piche, it gets into a different tangent, and therefore this is one part which if we were advisors to families, I think this is one part which we need to keep at the back of our mind. And there are loans received by the firm from relatives of partners, receipts in the course of or purpose of business and having a genuine connection, loans received from bank institutions, NBFCs, from government in accordance with FEMA, SARFAESI, seller of any property. I mean, these are some of the standard exemptions, received and repayable when goods or services are not sold, hire or otherwise. Advance for removed property. This is another element which can sometimes be little tricky, is that advance for removed property which are adjustable as per agreement arrangement. Now, today, as we know, that even under RERA, up to first 10% your agreement need not get executed. But for some reason, you take as a booking deposit, and which is below 10%, and you have yet to execute agreement. And for some reason, the cancellation happens, this law does not expect you to refund money. It expects that that advance will get adjusted. And so sometimes change of mind, and these are another aspects in practical life we are seeing, that no buyer is ever happy with a builder. They always feel that you are making money at my cost. उसको सस्ता उसको 10% डिस्काउंट भी दिया तो भी उसके बाद में इज नेवर हैप्पी एंड देयरफॉर most of the time if we are advising from a regulator side or from the builders or developer side, I think one of the other aspect which we need to be careful is that if there is going to be a kind of a fallout, and fallout can be with a broker, because you promised him X percentage of brokerage, you did not give him X percentage of brokerage, and you went and deposited money. And I have a live example where one of the brokers in a real estate developer had probably was in communication with the buyer of the real estate, the developer. He did not fulfill his promise. So therefore the developer did not give him his brokerage. He obviously now was dissatisfied. So what he did was that he was advised that uska bank account dhundo, go and deposit 50,000 rupees into that bank account. Now our smart accountants, deposit is there is no receipt. Oh, BRS mein khada kiya 3 months. He says we don't know where this money has come from, so we will continue to keep it as a part of a, and no further activity was done to determine that whose this 50,000 rupees is. At the end of the 3rd month, the real estate agent sends out a notice to say that on so and so date I had come, this is the property which you are building, this many square feet for this much price is what you had agreed upon, this 50,000 rupees is what was given to you, and this was deposited by you on your bank account with this so and so bank in so and so date. Now the obviously, and these are real stories. I mean, I'm telling you, after 9th year, the builder is still not able to sell his property. So the builder obviously said nahi, but then he found out bank mein paisa hai. Did you make any efforts? No. Why did you not make any efforts, sir? We do not know. So and that's what happens in the listed companies mein, to every quarter audits hota hai. Private companies mein to it's only an annual affair. The next month the lawyer sends out a notice saying that you have defaulted this many square feet, and which constituted 40% of the area, and that entire building was being built for leasing out to a bank. 9 years today, we are still in the city civil court disputing whether was there a verbal contract or not. The point I'm trying to draw is that sometimes this provisions which are well intended, because we know this very clearly, that most of the real estate developers have taken the money as a financial loan, given them the property. All IBC presidents are, we know that whether are you a financial creditor or are you not a financial creditor with a fixed rate of interest. First IBC came back and said that no, even if you're a buyer of a property, you are an operational creditor, you don't have a finance. Then the division bench came back and said that no, you are a financial creditor and therefore you are entitled to take IBC proceedings. But the point I'm trying to make is that because of the sharp knife this law is providing, while these are well intended, but these are also laws which can be used on the other side of the knife. And that is where I think, the ability to be vigilant and make the people in this industry vigilant is my second point as practicing professionals. And then as we know that if for some reason it becomes refundable and is not refundable, then within the 15 days of its becoming refundable, the said amounts would considered as deposits. And this can be the third area where if the accountants are not smart enough, if they know that this is, I had to get a permission, I did not get a permission, and therefore now this is becoming refundable, and if I don't refund in 15 days, it becomes from this 15-day onwards, the birds start applying. So only preparing check and keeping with you and posting and not depositing is not going to be sufficient. You will have to prove to a sufficient depth that you have done what is necessary for you to refund your money. And that is what is going to. So sometimes these are all going to be matters of conduct rather than intention. So what is who's a deposit taker? We saw that who's receiving or soliciting deposits by, so if individuals or group of individuals, a proprietary concern, a partnership, LLP, company, AOP, trust, cooperative society, or any persons who put together makes any other arrangement. So one argument which was happening was that this does not define HUF as a deposit taker. Now, if somebody was to come back and say that, oh, this is not an all inclusive, so either I have to put you in the residuary clause, or I have to then come back and analyze whether the HUF is an association of person. So depending upon whether Mitakshara or the Dayabaga, so somebody may come back and say that in Dayabaga it's an AOP because it is formed obviously after the death of the patriarch. If I have to advise, I'm not going to be on the aggression for sure. I think that if there is a mistake and if you have to fight, then that's a different issue. But if somebody was to ask that whether is HUF, and so therefore you will find a lot of articles around birds in the papers. You will have different, the lawyers will have a lawyer's view, practitioners will have a practitioner's view. Obviously, it does not include the corporations under the and banking corporations that's for there. So, what is an unregulated deposit scheme? A scheme or an arrangement of soliciting, accepting of deposit by way of business, which is not a regulated deposit scheme, and which therefore becomes it becomes anything which is not regulated becomes birds. And that's how. So President sir, your goods and service. You define what is goods, rest is service. So this is what it is. You define this, rest is all birds. So what does an analysis, if we look at the UDS, therefore it's a residual definition to cover in its ambit any scheme that is not specifically regulated. A scheme is a systematic arrangement or a plan and will involve a proposal for several persons. An arrangement can be between two or more parties, not necessarily involving multiple persons. I mean, these are your options. An acceptance of deposit, whether solicited or not, and solicitation of deposit, whether received or not. So, like those who are readers of Information Technology Act, and we know that under the Information Technology Act, an intention to commit a fraud under the IT Act is also a crime. So it whether done or not is a different issue. So technically, if you have an intention to violate Information Technology Act, the IT Act applies. It's not on an execution of a law. So this is again going to be, what is going to happen is that again, if you have a group of people who are talking about whether is this covered, not covered, when the moment they sniff it, they're all going to come back and say that, look, it was in your mind to have a scheme of collection of money which is not regulated, and therefore we also want to hold you whether you've committed crime or not. And that's how, that is the, I think my understanding is that the lawmakers actually wants to create a scare to come back and say that please, this is fire, don't touch it. I think that seems to be the essence which I'm getting when I'm reading the whole subject. Obviously, these are the people, RBI, RDA, State Union, NHB, your PFRDO, your EPFO, Central Registrar, and MC. These are all people who are regulating, and their deposit taking will be covered by the respective laws under that. Just only for those who will want to read under the SEBIs, as far as what are they covering. RBI part we have spoken, the RDI, the State Union, these are all the various schemes under this. So what are the offences covered by the ordinance? Soliciting or accepting deposits under any UDS, that's your section 3. Fraudulent default in RDS. Now this is a classic case where, and my professional brothers here from a banking industry will help me out here. The question which they are trying to address is that if I have taken a loan from a bank for a specified purpose and I default, whether will they apply this section, plus will they apply the section under the Sarfazi and IBC? At this point of time, what they are saying, the section seems to be suggesting that if you gave out a proposal for buying a house or for establishing or buying plant and machinery, and instead of end use of plant and machinery, you went and did something else, and you default, UDS, it will be classified as a UDS, and therefore all the provisions which are available under this mechanism will get triggered off. So what is going to happen therefore, and Ashutosh, and this is interesting from our banking audits, what is the view which the bankers are taking from this point of time when you find a divergence from the end use. So the question is going to happen is that if this happens and you are an auditor of that company, what will you do? And I come to the last section, that what will an auditor do in these circumstances, because there are rupee fines. Criminal action though is there against obviously those in charge of the management, but the quantum of fines is so significant that whether on that will you provide, will you not provide, will you take an opinion? This is one part. And finally is wrongful inducement in relation to UDS. So this is where I may not be the deposit taker, but my friend is inducing a third party to come back and say, "बहुत अच्छा है, जाओ." So that they are also trying to cover the people surrounding the deposit takers, as we call abatement in crime. I mean that's the second part. Is there any threshold for offence by UDS? All UDS, irrespective of whatever rate of return they may advertise to lure, should be banned. No scope should be left for misuse of any threshold, so that the scheme can be designed and disguised. Currently, they have given a provision to say that the regulators can define up to how much money can you take by way of a deposit, which will not get covered. We really don't know. Each state government will do different numbers or state numbers. I don't know. They have still not announced. So at this point of time, it's zero. I mean, that's a position at this point of time. Why is inducement an offence? Is a grave offence as actual collection and should be treated at par with running of the UDS. It's a preventive measure to stop such schemes from initiating, and therefore when we look at some of the aspects of your brand ambassadors, so you may have Amitabh Bachchan on a TV supporting a particular thing. Typically, would they if there's influencers of deposit takers, will they get covered? By all means. So all brand ambassadors, forget agents. Agents is because they are going to get paid as a percentage. Brand ambassadors because they are influencing or promoting. So therefore, what is therefore going to happen again is that currently they are worried about the food products and the safety and the image. Tomorrow they are going to get worried about being behind bars. That's going to be the. So are agents punishable? By all means. I mean and here again, irrespective of the amount of commission, this is going to be. So even if the agents receive no money and everything otherwise than in money, or they get gold, then they come back and say, "Oh, I am not an agent," but anything, your stamp, your WhatsApp, each of these are going to, because when they want to go back to tracing that from where it has originated, then WhatsApp today is the largest medium, and we all know that even in SSC leakage papers, I mean, like in less than 3 years, they were able to trace back who was the originator of crime. I mean, like that's the swiftness with which they are able to go back to so they will find various means of knowing from whether are you in a culpable homicide, if I may use the word, but whether they are there or not. So coming to one point now on the point, and why I said first brand ambassadors, and why did I have this as a last line, and this is meant for the lawyers to say whether if they knew. Now one can always come back and argue that I did my limited diligence. I did not believe that this was right, and therefore I did not know, and therefore I am innocent. But by the time this will all be analyzed, there will be several months before it will come up to that particular point. The law will first take its own legal course. What they have said, particularly for media, so they have said that if there is any scheme which is published and then eventually which gets into UDS, they have said that media will publish at its cost the what is not right. So therefore, it is also media is not caught for publishing, but having published, if it is found that this was not right, then media is also obligated to provide a referendum against that this was not right, so that rest of the people will not get covered. That's how they have casted a responsibility on the newspapers. So let's say what are some of the challenges on interpretation on an applicability. So the classic example is that this definition is by way of business. Am I in a business? As we know that by way of business and for the purpose of business, these are two different terminologies. Now, if one were to strictly argue that if I'm not in the business of deposit taking, I have a club, I'm constructing club, I've got timeshare, and therefore whatever deposits I'm collecting is against the assets or services which I have, and therefore it is not my business to collect deposits. But there, by the breadth of the argument, which they will come back and say that if we never intended this to apply, then they will flow back on your PRS, because there the financial establishment, the definition is not by way of business. So one way or the other it will get caught. But if they pass an ordinance where they stop the PRS, state PRS, to stop applying from a particular effective date, this is going to be one set of arguments. So now the question for professionals as us is going to be whether do we really sit back and advise and say that whether are you in a business of deposit taking and then deploying that money for the purposes of lending or for whatever purposes, or will I take up a view that it's not your business of taking deposits, but for the purpose of my business I'm accepting deposits, and therefore it may be too much of a risk for us to take up a call that these are the whole act does not apply. Today if I have to take up a call, I will probably not take up a call on an aggression, because the whole definition is one way or the other is going to get hurt till such time as the PRS is also applicable. Sorry. See, the problem with tweet, and my president sir knows that when they were giving tweets on the GST implementation, and then they come back and say that, oh, these are only the views of the officers and these are not the legal views. What have they done? They've come back and simply quoted the exemption to come back and say, oh, if you take money from your relatives or for the advances against your services, and therefore those are your normal trade businesses are not getting impacted. The point is that those are matters to come when first I have to cross the ground level to come back and say whether does this law apply to me or not, and then I have to come back to say that okay, if it applies to me, then what are the exemptions am I going to seek. So the finance minister has only simply tweeted about those exemptions which are available. They are not coming back and saying that whether are you in the business of deposit taking or not. So unfortunately, they obviously couldn't have said anyway otherwise as well. So the question is going to be that the second view, so the view 1 and view 2 can be between aggression vis-a-vis strict interpretation, because these questions were coming also from, if you remember, Chetan bhai, that when we were looking at the Companies Act deposits under the rules on jewelry taking, where you had SIP kind of a scenario, and the 12th was the free one, And the question was that whether are you going to complete the circle of supply of gold against those deposits within a period of 12 months or not. So when they went to the ministry was extremely clear that if you don't supply gold at the before the end of the 12th month, this becomes a kind of a deposit. So there was all of them came back and said that no, let's have a scheme of only 11 months. I mean, that's what happened, because you asked for it and you got the reply, and Titan had no choice but to follow the rule, because thereafter if they did anything else, they would have come back and said, look, you asked a question, I gave you a reply. Either you follow or you take a relief from the court. So this is what is going to happen as far as the strict definition is concerned. Yes, please. There's a okay. I think when I have my can I have am I on 36 slide? I have 6 7 slides. I think let's take some of the questions so that it becomes easier. Some of this I hope that some of your questions may come in. Uh, so whether a single transaction of acceptance of deposit is considered as an offence. Uh, Murder is only committed once. Whether loans obtained for personal purposes, medical exigencies is an offense. I mean, this is one of the questions which was coming in. I mean, like literally, if they are going to come back and say that I apply for an educational loan, and therefore it is not covered in the exemptions, and that educational loan is not in nature of outright grant, but it's a refundable grant, and therefore it is not in an from the list of exempted deposits, and I am as an individual I am covered. I think then we are trying to find separate milk and water. I think that's the, and so we hope that the wise council will prevail. Some of the operational questions, and I think President sir, I think we must, as a chamber, we must, or as a society, we must make out list of questions on which we must have the regulator provide their answers, so that it becomes at least a useful tool to say that at least let the innocents not unnecessarily get hanged for no reason. I think that should be our endeavor till such time as the whole thing also starts rolling out. And I'm sure there are so many questions which are there. Whether loans from partners is an offence. Now, this can be argued that a transaction between a firm or an LLP and its partner cannot be called as a transaction by way of business, because the partner is lending to his own firm where he is the financial stake. Now, the challenge is again the way these exemptions are given. So if I have only in an LLP, if I have only two company partners, theoretically there is no relative to a company, no exemption. I'm not in a deposit taking, and we know this. We know that there are enough SPVs where you don't have individuals as partners. You don't have a relative, so therefore no money from the promoters in their individual capacity can come in. It's a it's a sorry state of affair. ICDs, as far as from the point my dear friend Preeti had asked this question, that whether ICDs are in any event covered by the Companies Act outside the scope, and so therefore those will go out. If the source in the hands of the company is otherwise contravened, then obviously you apply the Companies Act. As far as the builders and jewelers have been banned under the law, so deposits that work like advances against the purchase of goods at a later date should not be considered as UDS. However, controversial and varying views are floating around, and one may have to wait for clarification. This is going to be another classic example, because some of the question came in is that if I don't give money, but if I give gold, because today we know that as far as the under the banking regulations for the gold is an commodity which they are importing, banks are importing and giving it over to the jewelers for onward domestic and export business, and the interest is calculated in terms of gold. So it's a gold to gold settlement. There is no rupee settlement. And the question, therefore, sometimes the question would be that if I don't borrow in money, but if I borrow in gold, and I either pay extra gold or I give interest in gold, or interest in monetary terms. Today, if we go back to the definition, again a controversy around that whether the gold by way of a deposit, because these are small time jewelers today, you will find that there is a problem. There is so much of gold which is sitting around, and again it is capable of being interpreted that whether it is money or it is gold. Gold is still a fungible asset, and therefore they may still come back and say that borrowing in gold is also covered under the UDS. Other challenges are obviously necessary approvals to deal in goods or services or properties are not obtained from approval and advance becomes referred, it will be treated as a deposit. Now this goes back to the day one. So you have actually committed a crime. Not in other cases, there is a default. You have a 15-day window period to curate it. If you don't curate it, then on the 16th day onwards, it becomes outside the scope. Here, it is ab initio. So in anticipation of getting a favorable order or a favorable approval is not something which you can play with. So unless you are, so your means of deposit taking will have to flow under the exempted part. We have spoken about the advances. Administration, we have said all deposit takers are required to inform to the repository authority, which is there we have to form, provides for appointment of a competent authority by state. Police officers have the power to search, seize. Ordinance provides for a constitution of one or more designated courts, and then depositors that accept. These are all your procedural aspect. Penalties, imprisonment and fine. You have solicitation is 1 to 5, acceptance is 2 to 7. Your section 4 was 7 years, 5 is 1 to 5. Fines are 2 lakhs to 10 lakhs. Acceptance is 3 to 10, 5 to 25, 3 times the amount of profits up to 10 lakhs. So you have various degrees of, and these are cognizable and non-bailable. I'm quickly coming back to the point on the role of the auditor. These are my last 3 of the sections. The auditor should communicate the non-compliances to those charged with governance and request them to regularize the same. If those charged with governance is involved in non-compliance, then you go up to the next higher authority, which is your audit committee or supervisory board. Should take adequate provisions have been made for the penalties in case of non-compliance, and based on severity of non-compliance, you look at your EOM, modifying an opinion or resigning from the audit engagement. This could be some of your points. And currently our SA 250, which from where some of these provisions are coming, the consideration of laws and regulations in audit of financial statements. This is where it says, your para 28 says reporting for non-compliance to regulatory and enforcement authorities. So your para 28 says if the auditor has identified or suspects non-compliance with laws and regulation, the auditor shall determine whether the auditor has a responsibility to report the identified or suspected non-compliance to parties outside the entity. And then para 19 says if the auditor suspects there may be non-compliance, shall discuss the matter with those in management, where appropriate, those charged with governance. If management or as appropriate, those charged with governance do not provide sufficient information that supports the entity is in compliance with the laws and regulations, and in the auditor's judgment, the effect of the suspected non-compliance may be material to the financial statement, the auditor shall consider need to obtain legal advice. Now, you have this challenge between your confidentiality and regulations. As we know that the RBI Act has a specific provision expecting auditors where there is a non-compliance with the RBI Act to report to them under the law. That is where RBI Act provides. Today, this ordinance does not provide a specific similar guidelines as what is there in the RBI Act. This is only going to be little interesting if our ethical standard board of ICAI, if they were to follow the international standards of the ethical board. Now this is what is going to be very, very interesting. Lot of debate. It took them almost 10 years for finally rolling out what they call is the non-compliance with laws and regulations. NOCLAR is what they call. So the Ethics Standards Board of Accountants issued a non-compliance with laws and regulations framework, which is effective 15 July 2017. It has already come into force. It sets out a framework that requires professional accountants to take actions when they become aware of any illegal or potential illegal act. So assuming that if a similar standard by the Ethics Board was to have got floated, then what is this international standard saying? So they are saying professional accountants in public practice, which is an audit of financial statements or other assurance services, professional services other than audit of financial statements, which is your tax accounting or training, and then professional accountants in business, your employees or senior professional accountants. These are the categories of people to whom this framework applies. And what are they saying? If you are providing an audit service and as a professional accountant you become aware of non-compliance, including suspecting of a non-compliance, inform those in charge of governance, determine whether further action is needed and which may include maybe resigning, and whether to disclose the matter to appropriate authority. The whole deliberation came around saying that, oh, what happens to my client confidentiality? What happens to the legal rights? What happens to my trust which I have between the client and the, will I become the whistleblower? I mean, that was the kind of a question which was happening around, that if I have to go and inform a regulator to say that, look, this is the client which I'm auditing and therefore there is a non-compliance and therefore you take action. The whole in 7 years of their debate, they finally came to a conclusion that anything which is in public interest has to be done, irrespective of whether you may be engaged by your client, but finally, this is your last resort. If it's a non-audit service, and it became even more interesting. I'm not a public accountant because today SA 250 applies only to audit of financial statements. There is no other standard, equal standard on auditing which says that if I am providing only a consulting service or if I'm doing a forensic audit, and in a forensic audit if I identify something of a non-compliance, today our SA 250 does not deal with it. This framework says that if it's a non-audit service, inform those in charge of governance, communicate the matter to the entities, external auditors. So, in fact, what may happen is that if we as auditors have not identified, but if somebody in the course of service to their client identifies, I'm only trying to say that what is the things to come. I don't see that even our ethical standard board is moving on to the same framework. So it's a matter of time before we may have a similar subject here. So inform the external auditors, consider whether future action is needed in public interest, and disclosing to authorities or withdrawing. I mean, that's another kind of a scenario. Professional accountants which are other than senior professional accountants, subject to protocol, inform the senior or the higher ups in exceptional circumstances, disclosure to authorities. So this applies to your junior level employees. And those who are senior PAs, which is your directors, officers or senior employees or KMPs, address the matter, determine course of action, including reporting to authority. So these are all going to be lot of challenges around our professional execution of services, because the onerous responsibility, because I think the whole thing, they're flowing in, coming back and saying what is for public good is what you as an accountant should be capable of shouldering the responsibility. And so the point is, nip in the bud is what I would call it, as potential to nip the fraud at an early stage, prevent widespread losses of the type we saw in innumerable notorious schemes. Thank you. You want to take
10 minutes? 5-10 questions?
2-3 questions?
Yeah.
So maybe 2-3 questions, I think. Suppose. Yes, please. If you don't mind, can I take the gentleman's question first? I think that was his first question. So, sir, वहाँ पे दीजिए ना, please.
Yeah. Sir, as you were discussing in the case of Tanishq, as is a body corporate, and that 365 days was applicable. Now, most of the jewelers, as you see, they are other than body corporates, partnership or proprietor firms. So, will that 365 days applicable even to them for acceptance of deposits? Because nowhere in the ordinance it has been mentioned.
They are not giving. So unless it
Huh.
flows into the in the kind of uh,
So say you have an
so
18-month scheme.
so currently the argument which they are going to take under the law is that eventually if I'm going to settle it against the money, then I'm saying no, it's a pure trade advance and therefore nothing applies under birds. I mean,
Correct.
that is what the, because 365 is flowing only out of the Companies Act. So
Companies
here they will come back and say that if as long as I'm giving gold against this money, and
Correct.
therefore it's a pure trade advance and therefore birds do not apply. That is what is going to be the argument of the. But see, what happens in all these cases is that all the worry for us as professionals is that there is so much of side documents that that if it's a pure advance,
Correct.
then yes. Otherwise, if it is surreptitiously or surrounded against them, then you will find, and because you will see under PRS, you will see that there is so much of evidence police has gathered around the, these surrounding papers, that they were always able to prove that what is your primary document and what were your secondary documents.
So
Yes.
I think even RBI in that FAQs they have clarified that if you settle by the way of a jewelry, then I think that this will not be applicable perhaps. Thank you.
So this deposits accepted under Chapter 5 of the Companies Act, which deals with fixed deposits, they get categorized as regulated deposits under this ordinance,
Correct.
right? Now, two questions in connection with that. If the company defaults in the
They
repayment
will,
of,
this will apply.
yeah, this will also apply, and
But
Companies Act will also
yes,
apply.
is there. So yes, yes.
Okay, yes.
So
And
they have multiple weapons at their disposal.
okay, and second question is, deposits, there are certain exemptions laid down for under the definition of deposit under the company's acceptance of deposit rules.
Correct.
Now, if there's some money accepted from a director of a private company or his relative, it does not get categorized as a deposit under the company's acceptance of deposit rules. Would still birds apply to this such kind of a transaction?
No, because so there where the challenge will happen is that you have, in case of relative, you have the second part to say one of the second condition is that it should not have been lent out of borrowed funds.
Yes, you should give a
So
declaration at time of payment.
so that is where again this challenge is, as we all know, that the piece of declaration, whether to take it at its face value or not to take it at its face value, these are all going to increase our cost of audit. Is all I can, it's just increasing your cost of audit. Because what is going to happen is that the documentation is going to be a key, and therefore somebody is going to come back and say that whether, what is the alternative mechanism you have deployed to simply accept it. So to answer your question, somebody may come back and say that as long as there is a declaration, I have no other knowledge to say that this was out of, I don't, do tax services, or I don't do any tax filing for that depositor. Because you see, where this all circumstantial evidences are going to hurt is that if I am also, as a firm, also dealing with the personal tax matters of the depositor, and in his balance sheet I know that there are borrowings, and as a company auditor I am accepting a certificate on paper, they are going to put one to one together. So those are going to be your real challenges in this application.
Thank you, sir.
All right. Thank you.
Thank you,
I'm not
Sandeep
going
bhai.
to hold any more because
One
we
question. Sorry.
The last one, please.
Yeah, thank you. So the question is, when builders take more than 20%, they are pre-launch schemes.
not
And
possible.
They are taking. I mean,
Not
that's
possible.
the reality.
If it is under
unfortunately.
ERA, at the end, on, the
And they're taking in
on
check
cutting off
also.
on 10% threshold, they will have to necessarily get into an agreement.
Yeah, but agreement is not entered because the building, the CC, everything is not in place. I mean, it's just a pre-launch. Now, they put a condition that if you withdraw this amount which you've paid, they'll deduct some money. So,
I mean, like,
so would
this is obviously going to stop their. I mean, it's simply not going to work.
Okay, thank you.
Thank you, Sandeep bhai. It was really a very wonderful session, and thank you for even addressing the questions. We have a very pleasant task right now to perform, which is to release one of the coveted publications of the society. The Direct Text Committee is coming out with a publication on the most controversial section of 56. So the book will cover issues and controversies in section 56 to 7, 7A, 7B, and 56 to 10. May I invite Amit Patel, the chairman of the Taxation Committee, to introduce the book and release the book, please.
Thank you, Mr. President. He has already actually introduced the book, so I'm not sure now what else I'll speak about. But since I've got the mic and the opportunity and a captive audience, let me just share a few things. First of all, as you are all aware, on the income tax front, not a single day goes by in our country when something exciting doesn't happen. We have had a year when we just didn't know how to cope with the pressures on us cast by our members. Everyone is saying you represent on this matter, you take out a publication on this matter, etc., etc. Some of you may have read the instructions issued by the CBDT member on 26th March, day before yesterday, addressed to principal CITs, asking them to take all possible actions to recover taxes from the taxpayers in these last few days, so that the deficit of almost 14% in the revenue collection is met with. Now today, and we feel very strongly about such measures being taken. So I'm happy to announce or inform all of you that the BCA Society, along with 4 other bodies of chartered accountants from across India, has issued a press release expressing our concern at these kind of measures being taken by the bureaucrats of the country. And we have strongly requested the Prime Minister and the Finance Minister to instruct their bureaucrat not to take such measures. So we would be sharing that press release with all our members maybe tomorrow morning. It is already there on social media, so those of you who are on Twitter may kindly just refer to the BCA Society's handle and retweet. Let us bring about a unified voice in objecting to such nonsensical measures being taken by our bureaucrats. That was one aside. Coming to the present task of the publication, the Taxation Committee, as I said, has got so many subjects to write on. And one which we selected at the beginning of the year was section 56. As all of you are aware, 56 has seen so many changes over the past few years, and particularly in the context of closely held companies, we have had huge amount of controversy being raised because of the amendments in the recent past. And to dissect these amendments, to bring out the controversies and the issues in these sections, the clauses which Sunil mentioned, we had the privilege of having 2 very senior members of our committee, Mr. Rajan Vora and Kirit Kamdar, both of whom who are here. I request them to please come forward. They took up the task of spearheading this project. They've come up with a very, very informative and useful publication. It's in our language, it is called monograph. So I think that if it is a thin book, it is called a monograph. So we have tried, but in all fairness, they've kept the language very simple, but covered each and every aspect involving these controversies. There are controversies, there are issues, and more importantly, a large number of case laws have been covered by them, which will help the reader, which will help all of us in being aware of the case laws and of the issues which have been taken up to the courts, and in trying to figure out how to comply with the law so that the matters don't go up to the courts. So this publication, I'm sure, will be very helpful to all of us. And I thank Rajan Bhai, Kirit Kamdar, and are the other authors also here? Yeah, Pranay and Jugal and Chaiti. So these 5 authors have taken pains for the benefit of all our members. I thank them all on the behalf of the Taxation Committee. Invite them all over here and request our speaker for the day to release the publication at the hand of the to release the publication and hand over to Mr. Ashok Dere, our senior past president. But the authors may please come forward. Thank you so much.
Thank you, Amit Bhai, Ashok Bhai, Rajan Bhai, Kirit Bhai, for the wonderful contributions towards the book. There are two or three questions which have come online. Maybe we'll take 5 minutes for those questions and then we can.
I'll take one of them. So this was one question. Whether a accept deposits and advances loan covered squarely. There's no question about it. You are in a business of deposit taking. The question is about educational institution accept refundable deposits now or not. Now, essentially, these are security deposits for a due performance of the student against whatever, whether the assets of the education. So I don't subscribe to the position that this becomes out of the, or rather within the purview of the birds. That's what the view would be, because these are essentially security deposits. These are by way of security deposits, and security deposits are exempted in this category. I think those are the only two questions which are there. Thank you.
Thank you, Sandeep Bhai, for addressing those questions. May I request Mihir Bhai to propose a very, very well-deserved vote of thanks.
Thank you, Sandeep Bhai, for a fantastic insight into this new provisions which are going to be really impacting us. You explained the regulations, responsibilities, and implications, and definitely some of them are frightening. But you did say that let the wise counsel prevail. And there's one thing which I can actually see as a silver lining is that yet the government has not thought fit to ban such deposit of knowledge that we get a benefit of. Thank you so much, Sandeep Bhai, and we look forward to this kind of lectures once again sometime in future once there is a clarity. There is one small thing. There is a tech summit which is on a very exceptional platform on this Saturday. So I would request all of you to see how these changes in technology can impact the way you work, and that's going to be really very useful and relevant for your future practice. So please try to register there. Thank you so much.